following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome back to the Option Block, your bi-weekly source for options, wit, and wisdom, punctuated by moments of sheer hilarity. My name is Mark Longo from the OptionsInsider.com, as well as the old Options Insider Radio Network, the ever-expanding Options Insider Radio Network, I should say. And I am joined today on the old Option Block All-Star panel by several of our stalwarts, our boon companions. We had a few shakeups here at the last minute, but these two held their ground, starting off with none other than Big Tim Navabi from Options Express. Mr. T-Nav, welcome back to the program, sir.
Thank you very much, Mark. How are you?
I am doing excellent, and I hear there's quite the shindig in your near future, sir.
Well, yes. I'm building my capital reserves right now because I take delivery of the Wife Futures contract in less than 2 weeks here.
Where are you planning to warehouse her after delivery? Where is your storage facility?
And I've heard that capital reserve just never really gets built.
It is like the addition to your house you think might get built. Yes, yeah. We'll build that addition one day.
One day, right.
Did you have kids?
Yeah.
The Wife Future is coming due very soon, sir. Where are you planning to warehouse that particular delivery item? Have you opted on that yet? I know those Wife Futures tend to be very particular on where you warehouse them afterwards.
Right. Just outside of Chicago, yeah. just west of the city.
I found a nice little warehouse facility that she will approve of.
Yes,
climate controlled.
It's been pre-approved actually, so
yeah, things must be ramping up in Navabi land heading into the final few days here.
Yeah, definitely.
Another week or so.
That you are correct.
Another week or so of freedom, sir. Don't make the mistake that Andrew and I have done. Run now while you still can. No, by all means, an exciting event for Mr. T-Knob. I could hear all the ladies in our audience swooning and sighing and just fanning themselves in their sorrow that Mr. T-Knob is soon to be off the market.
Well, thank you. I'm getting very excited for it, and I'm really looking forward to it.
But don't worry, ladies. We're also joined by one Andrew Giovinazzi of Option Pit fame. And ladies, this man can shuck a lobster, let me tell you.
I can. Well, actually, you peel lobsters and you shuck oysters, but that is just splitting hairs. I know you're a poor boy from Chicago who just only knows, what Angus is.
Ironically, that's why I mock you. I grew up in New England, so I know from whence I mock.
Oh, you do. You know
Yes.
from lobster,
but not in the hinterlands of northern New England, but down in southern New England in Connecticut. So not too much more clam chowder in that area than the lobster.
Oh yeah, for sure. God, I missed some trades here. I'm just looking at my log of activity, getting into some of this stuff.
Well, while you check your missed trades, we shall dive right into the trading block.
The trading block.
All right, and that trading cacophony means it's time once again for the old trading block, the portion of the show where we look back on the day's action and see what was moving the markets today. And it wasn't a heck of a lot of movement in either direction. The S&P was down about 0.2%, and the Dow was up about 0.2%, with the Nasdaq sliding down 0.3% to 3095, and the good old VIX cash having a bit of a vacillating day and closing almost exactly unched on the day. So even the vol didn't know where to go today. A whole lot of head scratching going on in the market today. So yeah, Andrew, were you watching VIX a lot throughout the day
Yeah, I actually I wrote a post on it last night at optionpit.com, but the VXX has been moving about $1.50 a day, which is about 150% realized actual vol for that bad boy. So there's actually a lot of intraday volatility in the vol products. Actually, they are probably the most fun day trading product ever, since they seem to just go up and they go right back where they came from for like 2 weeks.
You can't beat that, yeah.
You can't beat that. So there was a pretty good brush with volatility. I think the VIX actually was up about a handle and a half today at the top. I mean, it had a pretty good move, almost a whole 2-point move. 2-handle move. So
150% realized vol in these ETPs floating around the S&P. What has the S&P's realized vol been over the past few weeks? Yeah, exactly. It's not barely double digits. That's talk about a dichotomy right there alone.
It is. I think in a lot of things. I think a lot of this, as we talked about earlier, a lot of this is from all these ETPs that are slapping around these products. These guys got to get in big to adjust, and you just kind of wait till they're done. And I think it has been a great trade for 2-3 weeks, and even if I screw up one, it'll still, the other 3 weeks have been good. So, but the volatility, the actual products are much more volatile than the market is right now. Just to make a short answer.
It's amazing how much self-fulfilling churn these products create in and of themselves. I joke a lot, but they are essentially their own ecoverse or their own universe into and of themselves, and they create their own activity when there's none to be had in the actual underlying they are ostensibly based off.
Oh, I couldn't disagree with you. I mean, there's layer upon layer upon layer of stuff in there. I think if you understand them, which of course we go to great lengths trying to educate our clients on how they work, so they don't get caught being long, 25,000 shares of TIBCO when it's about to go right down the kashoop. So there is and I think, I for one obviously like having all these strange products listed, because we do the research and figure out how the heck they trade and monitor them and things like that. But I think for the average person, it's probably, and even I think for some fairly sophisticated people, they're probably missing the boat a little on these bad boys. They don't quite understand what's going on, and there's some pretty big positions that have been put on in these things, and as they unwind them, I think they're starting to cause little market chaos. Just for about an hour, but then it goes away.
I think as that frantic call Tim received last week is just testament to that customers still are not really understanding what they're diving into in this whole expanding VIX product world, and how these various products interact with each other and move into and amongst themselves, regardless of what's going on in the S&P itself. And speaking of what's going on right now, of course, we are recording this after the close here on Thursday, and there actually are some earnings coming out tonight. It's been a while since we could say that, but there are a few interesting names to watch, starting off with probably the big dog on today's calendar, RIMM, good old Research in Motion. And we've been sounding the death knell for RIMM on this show for quite a while, talking about who's actually, but no one apparently bought a playbook. This is the only company in the world who made their name. Yeah, they made their name on creating great email devices, and then they create a tablet with no built-in email or calendar whatsoever. You couldn't send email even if you wanted to. It's like, who runs this company? You have to wonder sometimes.
A bunch of mokes.
Yeah, so they've been slowly. I know we offend all of our Canadian listeners every time we say that, but it's just they seem to be the only ones buying this name. Of course, today was a pretty active day, and RIMM bought 82,000 contracts ADV of late, so that's extremely high for RIMM, and 330,000 today going into the announcement. So a lot of people diving into RIMM today. And it looks like the RIMM closed 1373, up about 6 cents today, and is trading about 1405 at 1420 in the after hours. So up a few percent. It doesn't appear to be anything huge yet developing there in RIMM, but we'll keep an eye on that one for you as the show progresses. Another interesting name having earnings after the close today. If you guys have had lunch in Chicago, you've probably been at COSI once or twice, and they have earnings after the bell. And the reason I point this one out is just because look at the chart on COSI. This one was hovering in like pretty much bankruptcy levels around 60 cents for months, 6 months or not more longer. And then about in January, late January, they just shot up off to the races and nearly doubled up to about $1.20, where they're traded about $1.15 today. I don't know exactly what precipitated that giant move to the upside. Obviously some fundamental improvements going on at COSI, but it's been a pretty volatile name, even though you can't touch it with options right now. So for our perspective, it's not exactly an option block candidate, an odd block candidate, but still an interesting one to watch for our listeners, as it's an interesting company that's kind of been dogged by some poor developments. And of course we have last but not least is a little known name we'll be hitting on in the odd block today, but we'll just take a quick preview of them now, is TIBCO Software Inc. They have earnings.
I used to trade that stock.
Did you really? I hadn't really heard of it until recently when I was looking at some volatility names and looking at some scanning for unusual options activity, and they popped up on our radar. It must have been an intriguing pit. You had some weird names out in that pit you were trading out there, Andrew.
I think I've traded about 600 different individual names over my time. So.
This just goes to show how desperate we were back in the day, listeners, when it was still physical pits, and you pretty much you got whatever you had in your pit, so you were trading nonsense like TIBX and hoping that it was.
At the time it was a much lower price stock, so it's actually performed. That was about 4 years ago last time I probably took a look at that thing.
Oh, really? So it was that recent you were trading TIBX? Okay. Yep. I was thinking this was like 1999 or something like that.
No, it wasn't sexy enough in 1999. Software company, has to be internet company.
Yeah, software is just doesn't do it these days. But a lot of interesting
software,
So a lot of interesting names to talk about here after the bell. We'll keep an eye on those throughout the show.
TIBCO makes middleware, by the way.
Oh yeah. It just says here on my fundamentals, middleware and infrastructure software, which is, of course, that's like saying business development on your card. It means nothing. It's the most generic of titles. Middleware covers quite a bit of ground. That's interesting. When you go to a party, you say, "Hey, baby, I make middleware." I don't think that really gets too many people's attention.
It's not as good as saying, "Hey, I work for Facebook."
You can go and say, "Hey, I do business development for a middleware company." There you go. Then you're really confusing everybody you talk to. But yes, also going on in the markets. Tim, I know you're a big oil man. Have you been following the drama out in Washington with Obama beating the drum to end oil subsidies? What do you think about that?
Yeah, it's going to be interesting if he's able to get that done.
Why do we subsidize oil in the first place?
That's a question he and many people on that side of the aisle, or I think many people in general, are starting to ask. There was an incentive years and years ago when these oil companies were essentially having to finance new exploration and new research by, they would have to forward sell in the futures market a lot of their potential future profits just to finance current exploration. But now that their profits are so sky high and they've had them for such a long time that the need for subsidies.
Now.
Yeah, exactly. At that point, you kind of have to wonder, what is the need for that? So if you're talking about a good target for a populist politician on the stump, then you can't get much better than a big fat oil company. So I think this one will probably have some legs, I would imagine. I guess probably oil companies are probably only second to derivatives traders and derivatives companies in terms of who politicians can get away with kicking ad nauseum without any sort of a repercussion whatsoever. And this one actually ties into both because there's those evil speculators trading in oil as well. Which so you have both of the nexi, if you will, of evil in one issue. So it's perfect for a politician about to hit the campaign trail. I
think too, and if the politicians start talking up too much, they should just stop pumping oil for a couple of days and make everybody walk to work, and that'll pretty much stop all that.
Yeah.
We will pump no oil for you.
There you go. There you go.
You can ride your horses.
And it's interesting too. I mean, 460 gas here in Chicago. It's I don't think is it painful? Yes, but if you really look at what amount of that is tax, I think that's where it's really painful.
Yeah, that's true. People don't realize how much a percentage they're paying at the pump is actually going back to the old tax man. I think if they hear that, then that tends to get their ire up almost as much as fat cat oil execs and or derivatives speculators.
Right. Well, it's like the Europeans. I mean, how much they tax a gallon of gas? It's like $1 a gallon or $2 a gallon or something. I mean, it's pretty high out that way.
Yeah. Well, they don't have all that lobster money coming in to subsidize the rest of their economy, so they have to get their money where they can.
They do not have the succulent lobster economy to subsidize the oil.
Of course, other news moving the old markets today. You mentioned Europe. Europe, of course, is weighing on the market. Still has a lot of concerns that things are perhaps not as healthy as they could be out there, not as robust in the old Eurozone as they could be. Of course, the market tended to shrug that off towards the close today. It wasn't exactly a massive bloodletting on the street as a result of that, but there was some bloodletting in everyone's favorite electronics retailer, good old Best Buy, coming out before the open today, before the bell with their announcements, and they got walloped pretty hard. I guess the holiday season was not exactly as friendly to them as they might have hoped. And they were down about 7% today, closed about 24.77, and they're closing hundreds of stores, I believe, throughout the country. So not exactly a good time to be in retail for consumer electronics. Seems like that's a rough gig to manage these in this day and age when anyone could walk into your store with a smartphone, take a picture of camera X, and then instantly check it on Amazon and everywhere else, and then buy it somewhere else and then walk out of your store. Which I do all the time, so I know how these companies are struggling to make ends meet. You're seeing some stores actually starting to ban smartphones, which I think is pretty funny, trying to put that genie back in the bottle. But
I mean, they're going to have to come up with ways to make it interesting for customers to buy products there.
Yeah.
You provide a geek with the product, and they can do it. That's the only way they're going to be able to do it.
They tried that whole service angle with the repair side on the Geek Squad side, and aside from those cool little bugs that they drive around the city all day, have you ever even looked at what they offer at the Geek Squad? It's amazing. Andrew, you probably should call them up for that static issue on your computer.
Well, the thing is, I fancy myself computer literate, but it's a farce.
Yeah, that's an amazing scam they have going with the Geek Squad. Everything I've looked at some stuff they have, and everything they do pretty much starts with reformatting your hard drive for a couple $100s. That's where it starts. You could go to them and tell them, hey, I can't find file X, and reformat your hard drive, $200 plus everything else. It's amazing how it just adds up with what they do over there. It's pretty. I guess they have to pay for those fun little bugs they drive around somehow. So that's how they do it. But yeah, interesting stuff to watch over there at Best Buy. I really don't know in this day and age how big box consumer electronics retail really stays afloat, and apparently it's a difficult beast to do. And of course, last show we touched on the whole debacle that was the BATS IPO last week. Andrew, you weren't here for the show. Tim, actually, you weren't either. I'm sure you guys have heard the show and heard our in-depth discussion on the old BATS debacle. But yes, to make a long story short, BATS went public and promptly imploded. The first time I've ever seen a company cancel its own IPO, let alone an exchange. An exchange, that's a double whammy. That's like, I don't know, Dunkin' Donuts going public and that same day having to recall all their donuts for salmonella poisoning or something like that. It's just doubly damning.
Make everybody pour out the coffee.
Yeah, exactly. Pour out your coffee, botulism. But yeah, and now there's been some fallout from that already. Of course, the biggest fallout that a lot of people really made people notice this was that the BATS had the poor fortune to impact the symbol range A through BF. And of course, what's included in A, but everyone's favorite name, Apple. So once Apple started getting driven down, everyone started taking notice of these snafus going on over at BATS. Now their CEO and chairman is no longer their chairman, just their CEO. So he's already the first to start feeling that heat a little bit over there. And of course, I'm not sure if you guys had a chance to look, but our friend John Grigas, frequent contributor to the show here, sent out some interesting documentation before the show, which was, let's be frank, it was a lot of tinfoil hat stuff on that site that he sent. But if you look through, I didn't have a chance to go through it before the show, to look through all the hundreds upon hundreds of pages of documentation there. But it was some interesting evidence that appears to show that there was an algo at the root of this, and of course that's everyone's favorite whipping boy these days. If anything bad happens in the market, it has to be some evil algo or some evil HFT lurking somewhere. But it certainly appears to be some issue going on with all those intermarket sweep orders originating from the NASDAQ that really seemed to just crush BATS. And it wasn't the proverbial software glitch that we heard about earlier, but it might have been actually some outside activity, whether malicious or just poorly timed. I don't know, but interesting information. We'll have to probably dig into that a little more. We didn't have time before the show to really dive into that. But did either of you guys have a chance to really look into that information there?
No.
I read the article.
Stock.
Stock is for women and children.
Stock is for, I don't know. What's the point?
Underlying volatility.
Underlying, who needs it, right?
It's just a vehicle for my options.
Options are derived in name only. Anyway.
Yeah, I read that. It's interesting. It's a lot to kind of wrap my head around. But yeah, I mean, he's definitely not very excited about what happened. And yeah, I mean, he's really trying to point out that, hey, this really was all about, some sort of alago. Just exactly how you said. I just have to try to study it, read it a little bit more, try to put it in plain English.
Yeah, it's hundreds of lines of data from the trade book, so it's kind of hard to parse in one sitting, but it is interesting nonetheless. Oh, and before we wrap up the old trading block here, we have to bring up good old Andrew's favorite premium buying and do stuff name, good old Zynga. They made the headlines again this week for picking up an app developer for over $200 million. These guys come out of nowhere and make an app on the iPad and iPhone that is essentially a drawing game that apparently becomes the most popular thing in the history of apps ever. In 6 days, it went off the charts somehow. And then wow. Zynga turns around with all this flush from their IPO, with all of this equity to start slinging around, apparently, and picks up these guys who, the rumor has it, I heard, actually, I'm not sure how truthful this is, but the rumor floating around is that these guys this is a decent-sized team, 30-odd developers, but they were down to, at the company, literally their last couple of $1,000s in the bank. And it was either make or break on this last app, or then they were closing up shop. And not only did they make it, but they knocked it out of the park with this last drawing app, Draw Something. And then literally 6 days later, Zynga comes in and scoops them up for $200+ million. So talk about just a Hail Mary knocking it out of the park.
That's awesome.
And your boys at Zynga apparently have some capital to throw around now because they're throwing it.
Why don't they use their stock?
I don't know the terms of this deal. I have to imagine this was a stock deal. I can't imagine this was cash. If this was cash, it kind of defeats the purpose.
No internet company uses cash for anything. Yeah. You know that.
If you just go public, raise all that money, and then you turn around and spend it on this, that seems.
Then you spend. Well, they're probably I can't imagine the world of apps it seems like they'd be kind of mercurial though, wouldn't they?
That's well, the whole social media world is mercurial. And look at MySpace was the big thing a couple years ago. But yeah, that does bring up an interesting question of spending all this money on an app developer who's had precisely one hit out of 30 odd attempts. 30 odd tilts at the old windmill, and they finally got one out of the park at the end, and they're worth $200 million apparently. So interesting stuff. But there's your boy Zynga. So interesting stuff going on. Are you still long premium and doing stuff out there in Zynga, Andrew?
I don't have anything on lately. Just it got to kind of an interesting level, so unfortunately I stopped caring about Zynga. That's all I can say.
You heard it here first, listeners. Andrew is no longer doing stuff in Zynga, so you can cancel your orders.
Every time you ask me about that stock, I feel bad I don't have something queued up. The only thing I will say is it is starting to get very, very cheap again. So you got this whole Facebook IPO coming out, stocks hovering around the 12 handle, starting to get fairly interesting again around a 60-something ball. So it's just everything in the market's doing the same thing. So Zynga is not necessarily all by itself in cheapy land. There's cheaper cheapy.
Yeah. Cheap from a vol perspective, because as everyone knows here, we don't trade stock.
No, stock is just a vehicle for your options. Everybody say that with me. Stock is a vehicle for your options.
And before we close out the trading block, RIMM still 1405 at 1420. So are they halted, or are they just having no action whatsoever in the after? I have to imagine the former.
That's pretty good action for them, considering how bad they've done on all the other.
But they put up 300,000 contracts today. I think there would be some size going on. I think this thing would be moving in the after hours if the number had already come out. And yet, apparently,
giant all crush.
Yeah, apparently it's
seems halted.
Seems halted to me. Yeah, so RIMM still halted. We'll let you know more to come as we dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and I feel funky just listening to that intro, but welcome to the Odd Block, of course, the portion of the show where we discuss the interesting and perhaps the unusual and sometimes even the dubious options activity that's lighting up the old tape today. Going to kick things off with some activity we saw actually from a couple days ago, and this is Groupon. And of course, we all know Groupon. Everyone knows Groupon these days. Don't need to tell you what they do or their ticker symbol, which of course is GRPN. I'll mention it anyway, just for the few out there who don't know. And they closed today at $17.70, down about a dime. That's, well off their peak of nearly $28 back in November, right after their IPO. So Groupon not exactly seeing the sunshine from an underlying perspective these days. And we saw some interesting trading going up actually on Wednesday, I believe, here, where someone coming in and legging into a relatively sizable bullish risk reversal. And we saw someone coming in selling 5,000. Actually, first off, before we even do that, this is the name that's been averaging about 17,000 contracts a day. So decent volume overall. Of course, they did all of that today in pretty much one spread, and Wednesday in one spread, and that was this risk reversal. We saw them sell about 5,000 of the May 13 puts. All of this was done in May, and then they picked up 5,000 of the May 22 call spreads, all for a net outlay of 55 cents per contract. So that again was they came out, hit 5,000 of the May 13 puts, used that 5,000 lot to finance this upside call spread, this 1922 call spread. This is a little bit more novel take on what we've seen traditionally being the old bullish risk reversal. Typically, you just use the puts to finance a call purchase. Here, they went the extra mile and financed that call spread on good old Zynga, so they massively reduced their outlay in terms of how much it cost them to put on that bullish position, and they're also coming out and saying, hey, if Zynga, I think Groupon, I think Zynga, all in the same breath. But if Groupon does drop down below that 13 handle, then these guys are willing to pick up that underlying at that relatively low price of $13. So Andrew, what say you about this three-legged call spread financed buy puts?
I say, I think it's a fairly decently constructed trade in Groupon. Taking advantage of the vol pretty much everywhere they can. I don't know how crazy I am for selling the May 13 put in that thing.
You're leaning to the dark side in Groupon, huh?
Yeah, I'm just, I am leery of Groupon until they actually start to make some money. I'm leery of it.
Oh, so spoken like an old school fundamentalist. Care
about the stock when they don't quite make any money yet.
But hey, they're gobbling up real estate all over Chicago. They must be making some money, right?
They had a huge IPO.
It's not like a company like this would spend money without making money. Come on, what world are you living in? But yes, interesting. Oh, good.
No. They're using real money that, well, they could end up becoming a real estate empire. Right? They buy real estate at the bottom in Chicago with their IPO, and they just flip it 10 years later and make a bunch of money.
That works so well for Sears. Perhaps one of the worst trades and one of the worst real estate plays of all time. All right, coming up next here on the old odd block, we have Red Hat. And keen-eared listeners will remember that we discussed them on our last show, and there was a lot of what initially appeared to be very, very bullish upside specs coming out in Red Hat, people gobbling up nearly 4,000 of the April 55, 57 halves call spreads here for about 75 cents. We saw that going up on Monday. And your first guess out of the gate is that there was some sizable bullish activity going on, but then you see that the trade was done essentially delta neutral tied to stock. So there was a sizable amount of stock, about 50,000 shares sold against that spread. So this was actually a more of a long vol / bearish underlying play. And both wings of that trade got hammered today. Red Hat just off to the races today, up nearly 20% or 10 handles on the day to close at 61.43. And so they blew right through the strikes of this spread and kept on going. And so what we ended up having is this guy who put on this spread about 4,000 times here on Monday really just pretty much had one of the worst positions you could have had going into today's activity. The short stock coming to act against them, the long vol not looking too good right now, and blowing through that short strike to the upside and just keep going up and just not exactly. This spread looked savvy on Monday just from a construction standpoint, not perhaps from an outlook standpoint, and sure enough, this guy bet on the wrong side of the coin. Wouldn't you say there, Andrew and Tim?
Quite a move, yeah. I talked to a couple of people today who were long some Red Hat options, and they were quite satisfied.
That's because your customers are the savvy ones, Tim, because you walk them through. You give them Andrew's advice of buy options and do stuff. And that's been working out pretty well for them.
See, it works. It works.
But it didn't work too well for this guy here in Red Hat. So yeah, sometimes you have to wait months to see the outcome of some of this unusual activity and some of the spreads that we see. This one only took a couple of days to see that this guy really he stepped in front of the train on this one and then didn't.
Oh wow! Now that I see what he did, okay.
Yeah,
I'm just looking.
Yeah, he bought an upside call spread and sold deltas against it. So yeah, he didn't win pretty much anywhere.
Yeah, what the heck is that trade? What does he get on the savvy scale for that?
From a construction standpoint, it was interesting, and that's why you pointed it out. From an outlook standpoint, I didn't really agree with his outlook, perhaps on Red Hat overall, and the fact that it was obviously an earnings play. This guy was betting heavy to the dark side, and not so dark. I mean, Red Hat, man, they're just lighting up the tape today. When's the last time you saw Red Hat or a Linux? A packager of Linux software off to the races, up 20% in earnings. That's been been a while.
Why would you buy a call spread and sell stock against it? You're asking for a trip to the woodshed.
He wanted long vol, but he didn't want to get that long, so he spread off some of the top side against it, and then...
Yeah, but he's short a ton of contracts. I mean, just all he does is make himself short a lot of contracts.
Yeah, he's net short up here now because he's blown way through the strike, so yeah.
Yeah, he could... He's just short. I mean... His call spread now is just, is Fantasyville for him. It's not helping him.
The call spread it helps in, the immediate near term around the 57.5, 58 range. But once you blow through 20% like they did today, then that call spread is no longer of relevance.
No, it's not. It is quickly shifting to irrelevance.
Perhaps they should have called you guys first. You could have walked them through a fly or something else that would have given them a little bit more upside in case this went the way of the dodo like it did today. This is
I can honestly say, Mark, my compadre, we do help people fix some of those problems. Save guys a lot of money in a lot of these big names.
Well, this is another case of the size money not exactly being the savvy or the smart or perhaps the well-timed money or any of the above.
Yeah, it looks like they kind of missed it everywhere.
Yeah, I don't see anything that really... That's why I wanted to bring that one up again. That one really lost on just about every conceivable angle. And
they picked 4 risks and they messed them all up.
So listeners, take heart. You're not the only ones just stumbling over yourselves out there trading these days. There's people with a lot more money than you, perhaps, who are throwing it away just as aggressively. So
even me with a zillion executions, I managed to enter a trade wrong into my trade window today. I had to go to the market and just back it out like a toad, but there was nothing I could do.
Yeah, that's the trader's equivalent of the walk of shame right there.
Let
me out, please.
But
I
exited immediately once I had the error. I took my $10 loss on the whatever the marks are, $20, and called it a day.
That was like when you got a great, let's say, stock fill on your hedge down on the floor, and then you knew it was way outside the trading range, and you just knew within a few minutes or perhaps a few hours someone was going to come begging to let you out of the other side of that, and it'd be a stockbroker or maybe a guy on the other side of the floor who did that hedge, and it was just a fun wait to have them come and beg, and they had to do the walk of shame just like you did today, Andrew.
Exactly. I actually had to talk to the trade desk, and they're like, I'm like, what am I saying? I wouldn't let anybody out either. They screwed up when I was on the floor, so never mind. I'll go bang it out.
I'll go eat it. I shall wallow in my own shame, sir. All right. Yeah. See you, listeners.
Get out of your errors quickly. Unfortunately, this red hat guy is not going to have that opportunity.
There was no chance for him. That's why.
How many deltas is he short up here now? Let's see. This is actually kind of fun.
Yeah, run that to its logical or perhaps illogical conclusion there and see what he's got.
It looks like, his call spread effectively might have a delta, but it isn't much. And up here, he's just short like 50,000 deltas.
I was going to say it's probably close to 50,000. It has to be. I have to imagine if he's in any way savvy that he came in somewhere during this rally and picked up hedged some of those deltas. I would hope. I have to be charitable and assume that. Of course, I don't know exactly how much chance he had, how high it opened here, but it just not a good day for that particular.
What's funny is it spent the whole day going up, 54 to 61.
So he had his chance. If he bit the bullet early, he could have locked in a much more palatable loser at least. And
and you know what else is kind of interesting is Red Hat spent the whole day with the vol going up as well. Now we're in the 30 vol range.
That's not surprising when you have an upside crash like that the vol should go up. That is an unexpected event, and you're getting a lot of movement. That's the kind of thing that should cause, at least in the realized vol realm, it should cause some additional volatility. And then
it should, yeah.
No, go ahead. Last but not least here on the old odd block, we have TIBX, TIBCO Software Inc. Good old Andrew's favorite name, the name he made all of his money in back in the day and allowed him to buy that palatial estate there on the East Coast.
I had to go back and look at it because I go, $30, that's crazy, because it never moved from the 10 handle. I just remember selling 10 straddles in it all the time because it never went anywhere.
Well, this is another one where it seems to be some crazy paper going up here in TIBCO, and maybe you could illuminate our listeners on how this thing trades, because I've never traded it actively. But there's earnings coming out after the bell today, and it looks like they come out, and the stock's down a wee bit. But the stock closed at $32.45, up about $1.50 today. is trading in the after hours about 32 at 32.20, so down slightly. But that's going to disappoint a lot of the people who were flocking into upside here in TIBX today. Someone was prepping for a red hat type explosion here in TIBX, and it seems to be right now, at least, that did not happen. This is a name that does about 2,000 contracts a day. They did about almost 45,000 today. A good chunk of that was in upside April calls. We have started off, there's a chunk of nearly 8,000 April 33 calls. Those bulk of those were buy, so there were bulls piling into the at-the-monies. But then you go up the chain a little bit. You got nearly 4,000 of the April 36s, substantially all the money calls going up, a bulk of them purchases. And then, even better, you have almost 2,500 of the April 39s lighting up the tape today, including a block of them being purchased for 30 cents. So that's just, there's bulls flocking, or there were. There were bulls setting up pretty heavy here for something to happen, something big to happen in TIBX, either coming out of earnings or in sometime in the next few weeks. I mean, these contracts are not done yet. They're not going to be looking too good coming into tomorrow, but especially these 39s.
Marked tomorrow.
Yeah, that 30 print is going to, I think, come back to haunt them a little bit on those 839s, but still interesting stuff. I mean, these guys are just off to the races here. These guys are they probably looked at Red Hat and said, well, TIBX makes software too. Let's buy 10, 15, 20% out of the money stuff with them too. And sure they did. And so and it's not even spreads. I thought they might be legging into some vertical or something like that, but it's not. It's just most of that is outright buys. There are some spreads on the 36 handle, but for the most part it's buying activity. So
well, you know what, you could have bought the 33.39 spread for very small dollars. Tiny. 90 cents or so. I mean, let's say $20. That would actually would have been a nice spread even after earnings, because you're really not paying much. I mean, that would have been real cheap. And you probably actually could have done that delta neutral, and at least you would have made the money from 33 to 39,
unlike the Red Hat guy.
Like Mr. Red Hat.
Of course, he collected all of that dime to sell those 39s. I'm not sure if it's even worth doing.
Yeah, but you probably maybe 20 cents. I mean, if there was enough volume originally, you could go in there with your spread after they put up all the volume, and then you might be able to, get a sale off.
That's true. If you could have legged it and taken down some of those 30s, then that would have been a great trade. You're right. But
I don't know. That's on the that would be on the Andrew Savvy scale, and you'd have to be you would have to be alerted to with your snazzy trading platform that there's some big prints going up.
That's a Navabi level of savviness right there. I don't know.
Yes.
I don't know if we could expect that from our average retail trader out there. And speaking of Navabi savviness, it is time. Yes, listeners, you've been waiting for it, and now it is time for the Tim Navabi block, aka the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
You hear that, listeners? You can even trade on mobile devices. Crazy world we're living in today. Welcome, of course, to the Xpress Block. This is the portion of the show where Tim Navabi gets to hold court, and Andrew and I can sit back and recline and dip our lobster in some delicious butter sauce. So, Tim, by all means, what have you in store for our audience today?
Well, there's two things I wanted to talk about. The first thing is when you're trading and you can't find a quotation for what you need, sort of what are you going to do then? What I wanted to say is that, always have a plan B, have a different source of where you can get a quotation. It just, there are going to be times that, you're going to want to place an order with your broker, and you're online and you're looking for a quote and it's just not there. That shouldn't totally throw you in a loop. You should be able to know, where else you can go immediately to find that quotation right away, just so that, if you're calling in your order, or if you're placing the order online, that you can get your order in, because that's really what's most important. For example, here's a futures, cocoa options or coffee options. They're traded in a trading pit. Okay, so there's bid and asks, and they're being yelled out, in the trading floor. So they can't really, come to a screen, and because they're constantly changing. So, individuals will call us up and they'll say, I need a bid ask, and I'll call down to the trading floor and I'll get the bid ask. There are places, I think, that you can go to, such as the exchange website, and you can find another quotation. You may not be able to get a bid ask on that, but at least you can know, what is the quote. The second subject I kind of wanted to talk about was kind of what Andrew was talking about earlier when he said, I misplaced the trade and, I just got out of it right away. I think that's really the route to take. So many times I see people, they'll get into a trade. It's not going to be, maybe they made a mistake. They bought something that, they didn't want to buy. They just, for whatever reason, they made a mistake. And essentially, they'll kind of talk for a while about the mistake or how we should bust the trade or, what else is there to do now? And, really, I think Andrew just nailed it right on the head. Just get out, I always tell the customer, if it's not the position you want that's in your account, you shouldn't have it. It's a learning mistake, and, kind of figure out, why did you make the mistake? And then the next time you're going to be placing a trade, if it costs you money, you're going to remember exactly, what you did last time that cost that mistake. So, I kind of liked hearing Andrew just say, I got out, I paid it and I got out. So
he takes his licking and he keeps on ticking. That's why. Didn't Timex, I believe, borrow that slogan from you, Andrew?
They did. They stole it right from me. I was really upset. They made a fortune and I made nothing.
I didn't mean to bring up an old wound, sir, but...
Oh, it's still raw. It is raw.
But listeners, that is a good tip. You definitely, if you hit the wrong button, if you buy instead of sell or whatever the case may be, then by all means, close it out. Don't try to work it. Don't try to...
I can actually tell a disgusting story of not covering an error for the Around the Block. And people will cover errors from now on forever.
Well, I'm both intrigued and also somewhat scared of what we have in store for us listeners. But I think with that tease, I think we're going to close out the old Xpress Block and dive right into a very potentially frightening Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is, of course, the portion of the show where we discuss what's on our trading screens for the next few sessions. And we'll give one quick final look at all these names to see if anything interesting going on in the land of earnings. RIMM still 1405 at 1420, so something is up over there. I don't know what, but that name hasn't moved for the entire hour that we've been recording. So apparently something is still going on. Something is still at work there over in Rimland. Perhaps the Canadians got their act together. Perhaps they're turning it around, and the stock is going to be off. Going to pull a red hat, up 20% tomorrow. We'll see.
They're adding email to their tablet. Yeah. Newsflash.
They did actually go and do that recently for all 300 people who bought a BlackBerry Playbook. They came out and added email support. I think very recently, so 6 to 8 months after it came out is when they finally put email on it. So way to support your customers there, RIMM. COSI still 115 at 125, so not too much. Lighten up the old tape there as well. And last but not least, we have TIBX, and TIBX still holding to the downside, even lower now, 31.85 at 32. So all those upside call wing buyers, I don't know what to say to you except enjoy tomorrow's session because it's going to be a painful one. That's not exactly. Look at all. Let's look at this call wing again. This is just nothing but people gobbling up as much upside as they can get. This reminds me of the flurry of people dashing into RDN last year. We talked about on the show, and how thing was trading I think $6 or $7, and they were gobbling up the 10 strike and above just to get into that name. And of course, it promptly turned around, went down to 2. And right. This is another. I don't know if TIBX is going to be heading down that far, but not exactly going to be making these long premium holders on the upside here very happy. And now, without further ado, Andrew, we teased it. By all means, tell us your horribly offensive story about closing out or reversing your errors. And I have a beep button here, so I could always censor you if it gets too far.
We're gonna go back in time to like 1997. I was a market maker at a time in a pit, and I was trading this little healthcare stock. It was one of about 30 stocks in the pit or something. And I was long probably like 1,000 back month straddles in this. I think the name was RHS at the time, and bought it for zero volatility. Like back then, like I do now, is I do stuff by buying juice and I just watch the paint dry. So I'm long this position, and I'm with the clerk, and we love the trade, and we basically had 4 months or 5 months to do stuff with the trade. But it gave me very large gamma. Right, I had probably 10, 15,000 gamma or something in a pretty illiquid name. So I had an electronic trading device at the time that would put in bids and offers for me, so I could sort of make a simultaneous market in the stock. I was doing more than the specialist was. Let's just put it that way.
I'm going to say you probably were the specialist at that point.
I was. The key though was I gave the parameters to my stock clerk, and he would input them into the computer. So I give him my morning list, and one day RHS opens up down $1. I'm like, whoa. I go, man, I probably bought 20,000 shares. I was stoked, right? At least. So it's about half hour after the close, didn't get my fill. Phone didn't ring. Like, what's going on? So I'm like calling, Marco, where's my fill? Hold on, let me get back to you. Click. Like, I don't like the sound of that.
That's never a good sign.
All the other guys in the pit, though, I mean, like, there's the Susquehanna trader, there's the specialist, are all jazzed because they all got filled on their stock, right? I didn't get filled on mine. So what I realized later is my stock clerk pinned my buy side $1 too low. So I filled everybody in the crowd.
Oh, God.
So I ended up selling like 20-something thousand shares of stock to everybody.
So you were the guy saying, please bust me. That was you.
There was no busting because it's New York Stock Exchange bust. There was no busting back then. There was, what was that? There will be no crying in baseball. There was no busting on the New York Stock Exchange.
Yeah. So
anyway, I got bitter. I had so much gamma, so I said, screw it, I'm not going to buy it back. So anyway, so it took me about $1.50 for the name to get for basically my deltas to kind of come back into play. And somehow, like 2 days later, the stock got taken over.
Ugh.
The problem is because I had that initial delta position, I ended up killing the whole value of the strat that I was long.
How much did that thing go up in the takeover?
It could have been $500,000. I ended up making like $20,000. But it's because I was so stubborn with the deltas, I screwed up the entire position by not just covering the mistake and then trading the position for the next 4 or 5 months. It was a total disaster. The worst part is the clerk that was with me when he put it on, when he heard about the takeover, he had already gone back to his other floor. He called me. He's like, woo-hoo, you should be stoked. And I'm like, not really. So I ripped the phone off of the kiosk on the SIBO, and I smashed it to bits.
Oh, I'm sure that added to your profitability on the trade by that nice fine.
Because it was my second phone abuse.
It was your second phone abuse. That's fantastic. There's a lot of morals to that story. Have you hedged yourself?
But I would say, close your errors. Just don't think about it. Lose the $20, whatever it is, and go on.
And never trust a stock clerk to work all your gamma scalps for you. That's probably the second moral of that story right there.
The funniest part of this was Jim Brophy at the time, who was the floor official. He had this really husky voice. He's like, Jesus, Andrew, how'd you break the phone like that? Because he had already fined me the other time. He's just shaking his head like a traffic cop. Jesus, I got to write you this fine ticket for this.
This is why I always stuck to NASDAQ names, because the magic of busting.
Yes. So anyway, that was the so cover your errors. I just saved everybody a ton of dough.
This is so you imagine how much bigger your palatial estate in Maine could have been if only, sir, you had covered that. You know,
it definitely I would have been lobsters every night instead of every other
night. So in addition to that horrible story of warning, what else are you guys watching for around the block here? I know you're done with Zynga for the time being. I know you're loading up on tons of VIX upside, right? That's pretty much the trade right now.
Exactly.
Nothing but VIX upside.
Yes, I had a hard time trying to buy any VIX or VXX upside today. I was trying to balance the rest of my stuff. Actually, I got a good opportunity on the close to do some hedging, but what I'm looking at is XLV. I'm very curious, right? Super low vol, how this is going to play into the whole Obamacare getting rolled back thing. There's pretty solid rally in a lot of these stocks, and I'm wondering if there's any kind of time spread action where I can just pick up some cheapy options here on the time spread. It doesn't move very much. I think if you can possibly position this around the Supreme Court stuff while they deliberate, it might be an opportunity. I mean, XLV, I think, is close to year highs right now. So, it's not a fast mover, but if you create the right type of position, it could be a lucrative trade.
It's like people are gobbling up puts here in XLV, in particular the April 37 puts. 15,000 of those went up today.
The vol just is not moving. It's like it's a morass of volatility.
That's pretty much all that went up. There's a couple hundred contracts, couple thousand here, and then 15,000 of the April 37 puts. Just one massive chunk.
Yeah, and it doesn't move the needle.
Maybe they spread some of it against these June 35 puts, went up 3,300 times. But aside from that, that's just one massive chunk of liquidity, and that's it going up here in XLV today.
And IV 30 down 42.9%.
Yeah, I guess they sold some too. I don't.
I don't know. I'm looking at the April. It looks like they bought them higher. It looks like
that does appear to be the case. Yeah, including a 2,000 block, 2,000 lot for about 47 cents. So, yeah, a lot of love, or should I say, lack of love for the XLV, given the flock of put buying here. Tim, what are you watching here around the block, sir?
As far as markets, just kind of taking a look at these commodity markets, kind of seeing which direction they're going to be going.
So while Andrew's gobbling up VIX upside, you're picking up all that oil upside, right? That's you.
Yeah.
Nothing but 1x2s in crude.
In crude oil. Mm-hmm. Yeah. I mean, today was pretty big, down. So it'll be interesting to sort of see where we go in the short term here. And as far as news, next Friday there is the unemployment number we have. Looks like tomorrow we have some numbers coming out: income, personal spending, personal income, Michigan sentiment. Monday FOMC minutes, auto sales, truck sales, factory orders. So that should be interesting. It's the end of the quarter. I'm sure there'll be some movement tomorrow. So
yes. A lot of interesting stuff to keep an eye on. Of course, it will be interesting to see how this oil subsidy debate plays out and how that impacts the market going forward. That might finally put the brakes on all of this oil upside we've been seeing of late, unless the Middle East decides to erupt again. Then it'll be a interesting back and forth between what wins, subsidies versus saber rattling.
Exactly, and it looks like it's finally. This is the first. You're right, Tim. About the first day, actually, this saber rattling premium has finally come out of this guy. I've had spot long some puts in USO for a while, and this was actually the first time I could hedge them by selling some weeklies on a lower strike. I almost fell over dead. I was surprised.
Well, with that lovely image, I think that's going to do it for the Around the Block segment, and that's also going to do it for this episode of the Option Block. I, of course, want to thank my cohorts here, my partners in crime, my steadfast companions who joined me on the old program today, starting off with you, Andrew Giovinazzi of Lobster fame. Andrew, what is coming up in the land of OptionPit.com, or indeed of lobsters, that may interest our audience?
Well, for Option Pit, what do we have going on here? we've had a couple of successful webinars. Mark, I think, and I were setting up another one, and I am looking at the event date. I know in June we will be doing the first couple weeks in June. We'll be doing a couple of lovely events, teaching people how to trade options. We're going to have more details on that soon, dates and times, but it'll be the first 2 weekends in June, where we'll be running some kind of all-day seminars and things like that. Near term, though, I don't know how much really we have on the block. I'm just looking at it right now, and I don't look at. Of course, I'm looking at my own stuff. They just keep me in the weeds, like trying to come up with trading strategy and teaching people. They don't give me any other information except where I got to show up.
They don't tell you. They just point you and say, "Go here."
Right, but we do have a couple big events coming in June, which will be in Chicago, the Windy City, in the best month ever for Chicago, which is June. I was very, very happy to go to Chicago in June. So Mark and I will be doing a tandem teaching session on these things.
I don't know if March holds up, then March might be my new favorite month in Chicago. This has been a good one. And listeners, if you want to find out more about that, then by all means, surf on over to optionpit.com/events, and they'll have all those listings there and all the fun stuff you can find, including how to get your own Option Pit branded slinky, and perhaps someday down the road, an Option Pit branded lobster bib.
RIMM is on its way to $12. They post a loss.
Oh, RIMM, finally. We've been waiting for you, sir. RIMM news as we're closing out the show. Yeah, RIMM, wow, off to the races to the downside. I guess they finally found out that, hey, they didn't have any email.
Yes, we had some in the option in our pit report today. We had some guys interested in RIMM, and we came to the conclusion that the 12 put spread, where you sold that weekly 12 put, was a good one. And as it stands right now, this is going to be this will be a nice little wiener for our subscribers there. I did like that trade.
Well, there you go, listeners. RIMM off to the dark side. Yet again, how much dark side is left for RIMM? We shall see. Yeah, $12.97 worth of dark side left. Oh, they're bouncing back. Trading 13. There we go. The worst is over for RIMM. All is behind them. All right. Mr. T-Nav, what is coming up in the land of OX that may intrigue our listeners?
Okay. On April 4th, we have a webinar at 9:30 p.m. Eastern Time, Intro to Options Part 5. It's titled Short Puts. And on April 10th at 3 o'clock Eastern, Russell Rhodes is having a webinar at Options Express titled Using Weekly Options, Bullish, Bearish, and Neutral Spreads.
All right. Thank you for that, sir. And, of course, the boys from KYO could not join us today, but by all means, surf on over to knowyouroptionsinc.com and check out their 18-minute portfolio review and all the other fun stuff they have going on over there. And speaking of fun stuff, by all means, if you want to find out more about any of the topics we discussed on today's show, as well as the myriad of other options-related topics we have, then surf on over to theoptionsinsider.com. Check out our breaking news ticker from the options market. Check out our growing legion of radio shows. Check out our news and analysis and information from such fine names as perhaps the boys from Option Pit and many others on any given day. There's a lot to find over there, a lot to like if you're into options in any way, shape, and form. And if you're listening to this show, I think you are. So that is going to do it for this episode of the Option Block. We, of course, want to thank all of you out there for downloading and streaming and subscribing to this program and making it such a success. And we'll see you next week right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.